Last week, I made moves in Boeing, Dutch Bros, JP Morgan, Morgan Stanley, and I also want to touch on cannabis for all of my cannabis lovers out there in the form of both Canopy Growth and Tilray Brands. I'm going to talk about what's going on in the space and why those two specifically are moving so much. So the theme this week was buy hate and sell love. And what do I mean by that? Well, Boeing's been hated ever since I made the video about the door being blown off in January, with good reason. I've been in Boeing since 2012. That's a really long time. And over again, I see it do this thing where it has a bad news event, and then it has another bad news event, and it has another bad news event. The pundits were saying that it was only going to sell off 20%. I didn't think that was going to be enough. And it turns out that I was right. It ended up selling off from its high earlier this year down to its low, a total of 33.65%. And the reason I knew it was going to do that is I have 12 years of experience with this stock. I've owned it since February of 2012. I didn't realize I was going to do it this way. I ended up buying about 4.87% at $177.82 back on the 18th. This locked in a 25.19% discount on shares that I had sold back about here, $237.68 back on December 8th of last year. And if you look at a chart like this, you can see the reason I did that. You've got these points of resistance in the past. And typically when a stock hits these points of resistance, it'll often sell off again. So it's a good idea if you have a large position to just trim a little, right? When you get to that point of resistance. I ended up buying it down here at $177.82 when the low that day was $177.52. Now, I'm not that good. The reason I picked that low, you can see that it had seen that low back in October of 2013. It has a lot of price action around the low, but the reason I did it was arbitrary. And basically everything in investing or trading is arbitrary. You're making random decisions and rules to do whatever you want to do to have an excuse to buy or sell. For me, I wanted at least a 25% discount off of the shares that I sold in December. If I had any lower on that price, I wouldn't have gotten filled. So that was sheer luck. This buy ended up raising my per share cost 8.99% from negative $202.25 to negative $182.25. In my portfolios, a negative per share cost means I've taken all the original capital out of the position in addition to $182.25 per share. Even though Boeing has sold off spectacularly from its high around $440, this is still one of the winningest positions in my investments in play portfolio, and it's all because of taking profits over time. From here, as you can see, my next buy target is $142.30, and you can see there's a lot of price action in there in the past, and it would go lower in the past as well, so I have buy targets below that as well. And my next sell target is up near its high from 2024 at $266.83. This week, it was time to take profits in Dutch Bros, so I sold 5% at $35.05 on the 21st. This ended up locking in 54.41% in gains on shares that I had bought at $22.70 back on September 28th, down around here. You can see it also only lowered my per share cost 0.3%, down from $33.15 to $33.05. But the reason I was selling wasn't necessarily to lower the per share cost. It was to reduce my allocation and do some risk management because I'd gotten 54.41% in gains off of those bottoms. And this is a hugely volatile stock, as you can see. From here, my next buy target is $25.70, which is a price we just saw at the beginning of February of this year. And my next sell target is $38.45, which you can see was a resistance point in the past back in 2023. On Monday, I decided to sell some of my JP Morgan, actually quite a bit, 15.41% at $191.51. And the reason for this is you could just see it in the chart. This thing's nearly parabolic, and we're talking about a financial here. This isn't a meme stock. It's not NVIDIA. So when it moves that much, I want to trim the position just to take some off the table because I think we're due for a pullback. This ended up locking in 87.2% in gains on shares that I bought at $102.30 back on October 16th of 2017 when I initially opened the position. It also lowered my per share cost $42.08, down from $39.42 to $81.50. And like I said with Boeing, the negative per share cost means that in addition to the value of the shares that I hold of JP Morgan, each one adds $81.50 to the bottom line. From here, I don't have any additional sell targets. JP Morgan is really on quite a run, and since I've already taken so much profit out of the position, I'm not in any rush to reduce it. It's got a decent yield. It's a relatively stable business overall. It seems to be something that I'd like to hold what I have. My next buy target is down here. It's a low that we saw just in January at $165.89, and this is where I'll start putting some money back into the position. Just like JP Morgan, Morgan Stanley, another financial, was also off to the races this week, and I decided it was time to take some profits when I saw that it was nearing a resistance point. So I sold 30% of my position at $93.58. This only locked in 12.07% in gains on shares that I'd opened the position with at $83.50 back on April 25th of 2022. But I've got a rule that I like to follow, which is I'd rather have a small position that's really profitable than a large position where I'm underwater. So yeah, Morgan Stanley might go higher, and if it does, I will actually sell the remainder of the capital near its all-time high at $109.25. But if it goes lower, I will start adding above my cost basis. And you can see my first buy is down here at $74.68, where we saw some support back in November. It did go lower. I will be buying more when it goes lower if it should do that. If it doesn't go lower than here, then it's a high quality problem. I have what I have, and it will just keep going higher, and I'll collect the dividend, reinvest it, and try to build the position that way. I've had a lot of viewers ask me to go back and revisit Tilray. And if you've watched any of my previous videos, I've already gone over the fundamentals of why I think this could potentially be a decent company in the future. But it's important to remember when you're talking about individual companies in the cannabis sector, there's a lot of stuff that's facing them that could go wrong, especially the ones that are based in Canada. Now, within theory, the Canadian companies will be opening and branching into the United States, but it's still high risk. There's so much supply up in Canada and so much competition that these companies are kind of on an iffy edge. The reason why they move so much, why Tilray, for example, jumped 48% off of its bottom just a couple of days ago, is because they are so shorted. There are people that are betting against them. And so any move that goes up, these people have to cover their shorts. And this causes a short squeeze, which is why Tilray and Canopy Growth went up so much more than the ETFs this week, MSOS and CMBS. And I covered those a couple of weeks ago. They're my two favorite ETFs. And they're the ones where I put the vast majority of my funds into the cannabis space. I stopped playing individual companies with any size when Canopy Growth took my head off. Speaking of Canopy Growth, wow, that was a heck of a week. Canopy Growth went up almost 150% in 1 week. That is just insane. You could just see the move from last Monday. Here's Monday going up to the high, 154.46 from the low on Monday to the high that it saw. However, even with a 150% move this week, I'm still down 80% in my Canopy Growth position. That's how bad it is. So if I was looking at getting into the cannabis space, if I didn't already have exposure, I wouldn't put any money into these names unless it was speculative money, money that you have to be prepared to lose in its entirety. Even Canopy Growth, I am prepared to lose that investment in its entirety. I'm letting it run, but my cost basis is nearly $40 in that position. That's a long way from where we closed at $7.69 on Friday. My Tilray position, on the other hand, is a different story. I got really lucky in Tilray and actually played it back when it first came public. After it pulled back here, I bought some and then sold on the bounce. So I'm just using the profits from my Tilray position. One of my key rules is to never turn a winner into a loser. And what that means is I won't ever put real capital back into Tilray. Since I am playing with the house's money, I'll put profits back in, but that's it. No other risk besides that. To learn more about cannabis companies and in particularly the ETFs, check out this video that I made a couple of weeks ago. Thank you for watching. I'll see you in the next video.